Still standing right around, I'm going to request you all to please take your seats. As I mentioned earlier, this high-level dialogue will explore how sovereign states and global enterprises can collaboratively shape a new era of economic stability and as well as inclusive growth. So on that note, it's my absolute privilege to also welcome our speakers. Well, guess what? This is where we'll have our speakers come together and deliberate together in the form of this high-level dialogue. I'll be going one after the other in terms of introducing our speakers. But they often say that to get the right answers, one needs to ask the right questions, which is why we are in the able hands of Nisha Podar, Executive Editor, Corporates, NDTV Profit. Nisha, let me firstly have you on stage over here so that you and we can welcome your speakers to join you in a short while. So thank you so much for joining us, Nisha. Thank you again. With that, let me go ahead and invite first up, we have us a transformative leader who's driving industrial growth, SME empowerment, and digital-led sustainable development for a resilient and innovation-powered island economy. We have with us Honorable Minister Geralda Desaubin, and if I may please invite you, ma'am, and let's welcome her with a huge round of applause, everyone. Let's bring that energy back in the air. Well, our next thought leader joining us is a next-generation business leader recognized for driving institutional excellence and transformative growth. We have with us Mr. Anant Goenka, President FICCI and Vice Chairman, RPG Group. Thank you so much, sir, for joining us. Well, marching ahead, our next speaker, our next panelist, is a distinguished economist and former Minister of Supply of Egypt, advisor to global institutions, including the World Bank and IMF, and also champion of trade and market reforms across the Arab region. May I please invite Dr. Professor Khaled Hanafy. Well, with that, let me also move ahead to invite our next speaker. We have with us the Padma Shri awardee and former global leader at McKinsey, shaping governance and corporate transformation in India. May I please invite Mr. Adil Zainulbhai, Chairman, Network 18. And can we have a dynamic round of applause for our dynamic leaders here? Well, that leaves us with our final speaker. We have with us a seasoned financial strategist and a member of the Prime Minister's Economic Advisory Council who comes with over 3 decades of experience of capital market leadership. Please put your hands together to also welcome Mr. Nilesh Shah, Managing Director, Kotak Mahindra Asset Management. Once again, we thank all our leaders for joining us. And with that, Nisha, I'm going to hand over the proceedings to you. Over to you then. Please do take your seats.
Thank you so much, and it's my pleasure to really welcome the esteemed guests on the panel. And it has been a very immersive conversation since the morning while spelling out the global economic cooperation and collaboration. I, as a financial journalist, have seen just one takeaway in the last few years of the challenges that we have faced because of COVID and geopolitical situations that have emerged where supply chain constraints have really tied our hands. It be any country that has been really impacted and our daily lives have been impacted. As a financial journalist, my biggest takeaway coming out of all these situations is that while the world has taken several decades towards globalization, any hint of protectionism has been combated with even more globalization for resilience and collaboration for an inclusive growth by several countries, and India has definitely taken a lead in that. With that, I have much more to be shared by the esteemed panelists here. Adil, you want to go first on how communication, which is so critical in global trade fair, global dialogue, and even in trade matters being articulated, language, body language, and what you spell out, and how the communications are built. On that front, what has been your takeaways when we look at global collaboration?
Nisha, thank you. Great to be here. And since you work for TV for a long time, both at CNBC and NDTV, of course, as TV reporters, you want to see what is the impact immediately, right? And what people say and how they say it is the manifests the impact, right? So if you say something's in a certain way, that's very different, and you want to take, you want to see what it means. But I'd also like to step back from it a little bit and say, if you look at changes in global trade flows, not global financial markets, but global trade flows, they actually are quite sticky. So no matter what anyone says, they don't move that fast. Because I can't move a factory suddenly and completely redo my supply chain. It's just too difficult. If I have to pay more, I will pay more. So I think when we are thinking about global trade flows, again, not global financial flows, because I can move money in the next 30 seconds, right? But global trade flows actually take a long time to change. As one example of that, over the last year, despite everybody's talking about how the global trade system is being broken, people are insulting each other, they're putting tariffs, actually global trade flows have grown, right? And as an economist, you will tell us exactly what percent, and actually it has picked up the pace. It has not gone down. They have changed a little bit, but actually they have gone up. So I think we have to separate things that take a while to change.
Yes.
We have to separate the impact over time from the dialogue. The dialogue has certainly changed, okay? And sound bites have become nasty, aggressive, and guaranteed to come on your show, Nisha. But
Thank you.
the actual trade flows
Yes.
have actually not changed as much as people think. We were all shocked that, 12 months later, trade flows have actually grown. They've shifted a little bit, but, and yesterday I think the Director General of WTO said at the Munich Security Conference that today 72% of all goods are still being traded under WTO tariffs. Not the new tariffs, but WTO tariffs. So I think on trade flows, things take time.
Yes.
It will change, doesn't matter what the dialogue is. Get a little excited, but don't get too excited. People who are making decisions on trade flows cannot make it at the drop of a hat. I cannot suddenly start assembling cars in one place instead of the other. Moving factories, training people just takes a lot of time. So I think we will see the real impact of what's happening over time.
Yes.
The impact on TV occurs a lot faster.
That's right. And even markets react much faster and bake that in. But the biggest takeaway from what you said is that the seeds which are sown today will have a much lasting impact for times to come. Professor Khaled, how do you see the global trade realignment because of the geopolitical situations and the challenges we faced in supply chain now becoming paramount for companies and countries together to be resilient through cooperation, and how can you play the bridge between the Arab world and the corporations for realignment?
Thank you for this difficult and interesting question. Actually, what we can see now is, of course, there is a great change. And the change now is faster than what existing economic models can solve. Accordingly, there is a need for revisiting the whole system when it comes to what's going around globally. And we cannot keep solving our current and future problems while utilizing the old models or the old vision. So we have to admit that we have to address something different, something new. Today, the idea is not being able to be only cost efficient or even fast or mass production. The idea is that we need more supply chain models that differ from what exists right now. Accordingly, we are not still talking about the length of the supply chain, long supply chains, or even short. We are talking about different types of supply chains that now we heard about nearshoring, friendshoring, different types that makes things more reliable in the future. When it comes to the Arab countries, Of course, the Arab countries themselves changed significantly, and the stereotyping of the Arab countries' economies has changed dramatically. And now we are talking about countries that they are very rich with human resources, very rich with knowledge, with technology and location, aside from what already exists from wealth in some countries. Also, when it comes to the Arab countries, we need to understand that we are talking about different segments of Arab countries. Arab countries are not homogeneous. So we have 3 or 4 categories of Arab countries. One of the categories is financial and capital abundancy. They have this. Others, they have human resources. Others, they have natural resources. Others, under reconstruction, and this considered a wealth by itself. So when addressing the Arab countries, we need to understand this. Then, when it comes to the IMEC, which proposed by India, which is a very nice idea and corridor, this IMEC is very interesting. But what we propose, if you allow me and everybody here in this place, that we need an IMEC plus. IMEC plus here means that we need to include other parties in this. Other parties for the benefit of India, other parties for the benefit of the Arab countries. In this context, I suggest that we need to have another route passing the Red Sea to Egypt, having Egypt as another hub, to be a gateway to Africa, to have the business and investment through Egypt to Africa without having the risk. And this is very important, to be open to a fast-growing markets in Africa, plus being able to access Europe through Greece, and later on to Latin America, because we already in the Arab countries, we have an agreement with Latin America to ease trade. So if we do this, India will not going to use the IMEC as just a corridor, but it will be a strategic move. We have a lot to talk about this technically and economically, but I will stop now here, and then maybe later on we can talk more.
So Professor Khaled, you know, for several years, India really wanted sovereign wealth funds to really invest with their deep pockets. And now, in the last few years, we have been successful. And even our mindset has changed towards certain sectors getting the right funding as well as investments coming in from the sovereign wealth funds and strategic partners from the Arab world. So from both the sides, there has been a change in the mindset with many years of deliberation. I wanted to put that across to you. Now, Geralda, coming from your vantage point, of course, the global heat is felt much more acutely by smaller states. And with your vantage point in Indian Ocean, how do you expect to shape this multipolar cooperation?
Thank you, Nisha, for the question. Permit me to answer your question in two different segments. First, focusing on the supply chain and the trade corridors. I will start by reiterating the words of Professor Hanafy, that there's a change, there's a shift when it comes to supply chain. We are moving away from the optimized cost and speed. We are now moving towards resilience and strategic alignment. Supply chains are no longer just economic networks. They are now instruments of national security and diplomatic leverage. Now, coming from a small island state, we definitely face constraints when it comes to supply chain. Being small, we import almost everything, food, fuel, medical supplies, even machinery. We are heavily import dependent, and of course there are costs attached to the importation. The longer the distance, the higher the cost. We are limited in terms of shipping routes, shipping frequency, small cargo volumes, no economies of scales. So we are very vulnerable, and we are also vulnerable to natural disasters. A port damage can isolate the country, any disruption on the international market can affect the small island state deeply. We are exposed to global price volatility, shipping disruptions, higher freights like I've mentioned. We are also limited in terms of infrastructure. However, there are some benefits when it comes to small island states because we are strategically positioned and we can be adaptable. Interdependence is unavoidable, but it can be strategic for small island states. When it comes to maritime and geographic locations, we can leverage our location to a global logistic hub, global specific shipping routes, maritime safety and illegal activities, illegal fishing and resurgence of piracy in the region is one of our focus areas. So if we can position ourselves strategically to leverage ourselves with the other countries, other economic, we can help shelter ourselves from these external shocks. For example, we've seen Singapore, who's transformed itself into a critical maritime and logistic hub, despite not having any major natural resources. So the constraint doesn't stop us, the small island economies, from strategically positioning ourselves and adapting to the developing world out there. When it comes to trade corridors also, we are affected because we are mainly dependent on shipping routes, on transshipment hubs, on mainland ports. Some countries have only one port or one international airport. Seychelles is an example where we have one international airport. And disruption in any hub countries directly affect our trade. Geopolitically and external shocks, we are also affected. Global fuel price spikes directly affect Seychelles. Sea level rise, coral reefs, fisheries disruption, which is one of our main pillars of our economy, affect us in a way. But to conclude, for the Indian Ocean island states, the small island states, like I've mentioned, interdependence is unavoidable, but we can also be strategic. In a world where corridor competition and supply chain realignment, we can become energy route guardians, climate finance hubs, digital financial connectors between Africa and the rest of the world. We can become a maritime hub to ensure maritime diversified shipping routes and security. So a lot can be achieved for the small island states despite the constraints that we face.
All right, so a lot can be achieved, and you did suggest some of them. Is fund flow and even cooperative development on your land also critical to you?
Yes, it is very critical. And when it comes to fund flow, we're moving, the new administration, we're moving towards fintech and exploring these avenues on how we can generate funds and explore other avenues for fund flow. So
right. That's also very critical, and India has also grown with foreign capital, Nilesh. How does capital inflow really balance with the priorities of the country, one, and global realignments which are changing? How to strike that balance?
So, good afternoon, everyone. Capital alone is not sufficient. What we need is knowledge along with capital. The best ever partnership which India and the world has seen is AstraZeneca's medical knowledge and Serum Institute Pune's vaccine manufacturing. It has not been recognized, but half of the world's eligible population got saved because Serum delivered 2 billion plus vaccine. Would capital alone create a serum factory? Answer is no. We need technology, knowledge, IPR, along with capital. Reverse is also true. When Suzuki came to India in 80s, it was a nascent automobile market where you had to wait maybe 10 years to get a delivery of a motor car. And it was the same model which you were getting in the 40s. Thanks to Suzuki, not only capital, but also the technology and also the total quality management and so on and so forth. Today, Maruti Suzuki sells more automobiles in India than what Suzuki sells worldwide. Dare I say that despite paying royalty to Suzuki, entire market cap of Suzuki is reflected in Maruti's balance sheet. Now, today, the research done by Maruti on small car benefits Suzuki worldwide. India has also benefited as Suzuki Maruti created a lot of auto components. A Motherson Sumi now has global presence and their turnover is about 20% lower than Maruti Suzuki. So the partnership has to be in the spirit of Vasudhaiva Kutumbakam. It should be win-win for both the parties. The risk taker, the capital provider, undoubtedly should get appropriate return. But they have to also ensure that the country which is receiving capital also benefits in terms of knowledge, in terms of IPR. If the whole world moves to this Vasudhaiva Kutumbakam philosophy, rather than colonization philosophy where you only take and don't give anything, then that is true partnership.
Thank you, Nilesh. And you made my job easier because my next question is to the corporate voice. So Anant, he explained it so nicely that we need global cooperation and the new era and the new age of futuristic sectors that have emerged, whether it be artificial intelligence or electric vehicles or storage batteries, they all need resources and technical know-how which are developing across the world in bits and pieces. So there has to be a collaboration. How does corporate India look at it? Because they have their own balance sheet and they have their own stakeholders to answer every 3 months. But they have to also align with the country's priorities as well as the resilience of the country, and also look up to the government for opening the doors for strategic resources. So all put together, it has become much more pronounced than ever before we have seen in history to be collaborative and to have realignments and government support. How does corporate India play a role in this and see it?
So I would take a lot of guidance from the vision that has been set by the government, and that I would say China particularly has done an excellent job in having a strong partnership between government and corporate. If you look at the Made in China plan 2025, which is completed, the achievement of that plan may be at about 90 to over 110%. They identified the areas of focus, whether it's robotics, healthcare, drones, and so on and so forth, and they have achieved most of their plans because of this strong symbiotic relationship. Similarly, in India, if you look at the progress that we are making, I think our Prime Minister spoke about self-reliance and Atmanirbharta even before the tariff wars. So how can we think about import substitution more seriously, looking at our entire value chains? I'd say that is one thing that we are working towards. More recently, we have the FTAs that have been signed that, again, are very thoughtful FTAs in the form of which are the countries that are time-tested relationships where there is complementarity, particularly with respect to developed world and the developing world, where we can we have the power of people, they may have the power of technology. So can we look at joint ventures, partnerships, strengthening trade relationships between that? And the third, I would say, is more partnerships between industry and academia, learning again from the world as to what is happening. I think this is an area that we want to do more, we have to do more. So I would take the views of the governments as a real guiding force and then take that forward in terms of trade relationships as well as Atmanirbharta and resiliency as well.
So the difference of the political structure in both China and India has been one of the biggest differentiators between the countries. But I would say our country and our government, as one of the largest democracies in the world, has also lured corporate India with PLI schemes, subsidies, in really aligning corporate India to go with the self-resilience, Viksit Bharat and Atmanirbharta, because if semiconductor subsidies were not given, PLI schemes were not given, corporate India wouldn't have put their own money and might behind it. So there is a different approach that Indian government has taken, and that has really worked. Professor Khaled, how do you see the India's growth and the collaboration that you foresee from here in the new global order?
Actually, of course, as mentioned by the government over here, that India is witnessing a recognized growth rate, which could be the highest worldwide and the highest in the big economies, actually. And we see that there are great changes and openness in the Indian economy. And I believe you just mentioned the political democracy, but I can see the economic democracy as well in India nowadays, while we have this openness. Also, the openness translated into agreements among potential partners and existing partners. So, as mentioned for the European Union just recently and many others. But again, I suggest that there are other markets around the globe, and there are great opportunities and potential in other markets, not just to be relying on exporting final goods, but being the main provider of the knowledge and the technology of the production. So this is more sustainable, and to have a footprint in markets like in Africa, like in the Arab countries, not just to target these markets, but to utilize these markets for themselves and for other markets, as I mentioned, in Latin America. By doing so strategically, India will be the provider of the new supply chain system, which will be different even from the largest competitor of India. I mean what I say, because this is a different model. So I call for this for everybody.
Our different model has been backed, Adil.
I wanted to add to Professor's talk on this, which is, one of the things that India's leading in is in digital public infrastructure like UPI. In many other parts of the world, transactions on credit cards and through banks are being weaponized, as we heard today, right? Because it's controlled by one country. One of the things that India is bringing to collaborativeness with all the countries is to create a UPI-like digital public infrastructure that is available to everyone. So any country can take it, they can control the data, they can run it. The cost is nothing, because the cost of a transaction in India, as you know, is very little, and the cost of a transaction in many other parts of the world is 3% on your credit card. So I think it's a great example of collaboration, cooperative development, and making it available to all other countries in the global south. So I'll give you two examples. One is India created Aadhaar, right, which is the identity system. It's now being used by 30 other countries, and it's free. They can develop their own. We give them the software, and they can do it. The second one is UPI, where you can now use that which is universal payment interface, Google Pay, etc., and is now being made available to other countries. So I think as we get especially into the higher tech areas, where more and more of the value added will be, it's a great opportunity for what External Affairs Minister talked about, which is collaboration between countries in a way that it cannot be weaponized. Everyone is aware that if you have, $1 trillion sitting in the Federal Reserve, someday or the other it may be blocked, as the Russians found out, right? But UPI and technology solutions like that are a way to create a collaborative infrastructure that then allows everybody to have their own sovereignty over the data, over their transactions, and at no point can it be weaponized against them.
Right. This is a great point you mentioned, and the two-factor authentication that India has is one of the strongest, financial, security that is given, which is nowhere in the world as good, and that is one of the very big successes that Indian financial services has also got, Adil. And innovation is critical to corporate India's growth. Now, how can innovation be aligned with the strategic moves of the country, Anant? What more is required from the government at this point to innovate things like UPI, which keeps us ahead and is very strategic for the national security and national realignments as well?
So I'd say that the economic survey really brought out our geopolitical position or desires very well. I'd say that if you look at, we want to move from Atmanirbharta to strategic indispensability over time. And to do that, the government is taking a few steps. One is, for example, the 1 lakh crore R&D fund that was announced by Finance Minister. Now, the role that corporates have to play is really understand how to use it effectively. Today, if I were to go out to businesses and say, okay, are you making use of that fund? I don't think that is being fully thought of and prioritized to a certain extent. Second, I would say is, in India, we are still too quarter tak focused. We have to think longer term and move towards saying that how do we get lower returns for a short period of time and take a leap of faith that R&D will help us benefit in the long term. New networks are being designed, new trade flows are emerging. Are we as corporates solving global customers' problems? And I think Indian customers or Indian corporates are still fairly comfortable working in India. So how do we go out to Europe? How do we go to US and some of these new countries that we are strengthening partnerships with and saying that what is unique about that market? How do we enter and differentiate ourselves? Are we investing in local talent, building brands and investing in design, packaging, and such future needs? So I think while the government lays out the highway for us, I think we as corporates can do more in partnering there and developing these opportunities for innovation.
So divergent directions in which both corporates as well as government goes, that needs realignment. And as our world also gets global in terms of resources and technical know-how, this alignment is really shaping up is what we are seeing, because the corporate India knows that we need government support for rare earth, for minerals, for lithium, for our batteries, and therefore the government support is required, and we also align with that. So that's for the first time I'm seeing more of that really taking shape. Geralda, is that the similar thing in your country? And as a country, as you look at realignment, taking help and also providing your resources to other countries for collaboration, is corporate India, people in the money, really aligning with the agenda for the nationalistic fervor?
Thank you. We are a small island state and we are focused on niche markets, specialized in high-value sectors. For example, Seychelles, we have the tourism, fisheries. But there are key areas whereby we can optimize a few export areas. Digitally, like you've mentioned, some small island states are investing in renewable energy, for example, and digital supply chain system. In the Indian Ocean, we have the critical submarine cables. These are to help the remote islands to be more self-sufficient. So we are moving towards the digitalization of the country. And as he has mentioned, there is a need for the private sector and the government to be aligned so that this can be achieved. So as the government, we are working with the private sector to enhance the digitalization within the country, the corporate world and the government together. Because if we don't do it together, there will be a disparity. And what we want to achieve, we won't be able to do that. We are also, as a small island state, a small economy, looking to external partners for support. India is one of our major partner whereby we get assistance. Not only capital-wise, financially, like he mentioned, capital will never be enough to assist in the development. So physical resources, now we are talking about digital. We get a lot of assistance from India in terms of capacity building when it comes to digitalization, the high-tech program. So we are looking towards other external partners. We have a very strong collaboration with the Arabic countries. We just attended the World Government Summit last week, whereby we had very, very fruitful discussions about how we move forward together in terms of digitalization. So despite being small, Seychelles has a lot to offer, and we look towards the support of external partners as well, for us to achieve what we want.
All right. So this momentum of collaborative approach between the government as well as the corporates is very much relevant. But there is corporate voice, Nilesh, that we have to go beyond quarter se quarter tak and really go for the agenda in the long run. The market really aligned with the thought of sustainability when it became a huge revolution during COVID and the ESG, where some bit of investments were going into that at the expense of returns, immediate returns, and they were seen and realigned into investments in the future. Can the national agenda, resilience, innovation for future also be aligned, and can market acceptability be there? You are at the top of the helm to really create that opinion. Is that possible?
So let me counter Anant. There are many loss-making companies which are able to raise capital. There are many companies which are trading at far higher valuation than a hard asset company. Why is that happening? If market was focused on quarter to quarter, why will loss-making company get not only money but also valuation? I think Mr. Market is very smart. They take into account net present value of cash flow. Mathematically, current quarter cash flow is more valuable than distant quarter. But if the growth is compensating, if growth is higher than the cost of discounting, Mr. Market is smart enough to give you valuation. The availability of capital as well as valuation is linked to one, net present value of future cash flow. If there is certainty, money is available, valuation is available. Second, on the environmental social governance, while this got formalized in this century, but imagine Empress Mill set up by Tatas in last century. It had provision for crash for working mothers. That was part of ESG well before ESG was coined. And market always respected Tata brand. The same is with RPG brand. Market is respecting that brand and they are following governances well before it got coined. So I think market is smart enough. Many of the practices of market is getting formalized in the academic world and presented in a better research so that others can follow it.
Market is smart enough, that I agree with you, Nilesh, and Anant will also agree to that. And there are also different pockets of investors, and you appeal to that, like the venture capitalist world patiently stayed with the entrepreneurs for 10 years before seeing the final return of their resilience and innovation. So there are pockets that are available and the right kind of funding is available for that. But Adil, when we talk about the right narrative and the right approach and making people understand about the agenda, realignments and long-term goals, where are we lacking and what more needs to be done?
So I wanted to give you an example, just as you did, which is on a similar forum 10 years ago, we had a lot of discussion about innovation and the startup ecosystem in India. At that time, there were 10,000 startups in India. And, you know, we all despaired, everybody despaired that you could get to 100,000 startups. Today, we have 150,000 startups in India. So in a 10-year period, many things can change. You can't do it in 1 year, but over a 10-year period, many things change. Sometimes the narrative catches up with the reality, right? And so you have to wait for the reality to show up. So we kept talking about, can you recreate Silicon Valley in India? And everyone despaired because we had less than 10,000 startups. And now we have 150, and now we're talking about, can we get to 1 million startups? So at some point, you have to get a little bit of confidence. When you see something happen, you can get a little bit of confidence, and then you can say, yes, it can be done. So if you look at the pace at which venture capital, private equity, HNI offices are now putting money into innovation in India, it's dramatically higher than it was 5 to 10 years ago. Okay? The government is starting to put a lot of money into it, as we said. The markets, you know, there's going to be a huge IPO year, I understand, right? Markets giving great valuations. So I think a lot of this happens with a little bit of patience. So you can change the narrative to say, in the future, we want more innovation. And you start putting in practices such as government funding, more venture capital coming in, and all of a sudden, you'll start seeing innovation. So I'll give you another example of this. 10 years ago, there was not a single company doing anything innovative in space in India. Today, there's like 500 companies that are working on space. You know, they're designing satellites, they're designing rockets, they're designing all sorts of things, right? And only 2 or 3 of them are big companies. Everything else is a startup. So in a very short period, with the right policy, we could get a large number of startups that are doing amazing things at amazing prices. So that's, I think, a great example. If you look in pharma, where, you know, most of pharma innovation happened in US, Europe, and to some extent now in China. But Indian companies, for the first time, are coming up with new molecules, new drugs, new biopharma products. So it's just the beginning. But we've seen this story before, which is, in a 5-year period, a lot can change. So I'm absolutely sure that 5 years from now, you'll have many, many companies in pharma and in biotech who will discover new products. If you get one product right, that's $1 billion.
That's right. And innovation and R&D requires patience capital. It needs time. And this time...
amount of money you want. Isn't it right?
Mr. Market.
So yes, and market, as Nilesh said, also understands, but there's a certain level of growth after which the companies hit the market, and there is a reason for that. And therefore, the market also expects the results at short terms also, at a growth stage. But Professor Khaled, when we talk about the lessons that we have seen so far in global collaboration, and also the Arab world alignment and India as an opportunity, what more, in your view, needs to be done at this particular time when there is so much disruption all across and collaboration is very critical for an inclusive growth and sustainability?
What I see is that we need more understanding of each other's. I believe that, again, the stereotyping in the Arab region, we need to change this. The Arab region is totally different, and the opportunities are huge. There are funds, yes, but there are markets and there are logistics hubs as well. We can imagine here in India, for instance, that we are talking about EVs or pharmaceutical. We can rely on the IP, we can rely on the technology, we can rely on the know-how, and so on. And we can rely also on the labor-intensive production. But the mobilization of this, because the market is not India, the markets are everywhere. So we can mobilize this to a country in the Gulf, for instance, where energy is abundant, when metals are abundant, when financial resources are abundant, so we can add value over there. Then we can move towards a country like Egypt, for instance, where logistics, where location, where access to 2 billion citizen market, and we can add another value relying on what exists in Egypt and having the final packaging and having the collaboration over there, and then we can move from there either to Africa or to Europe. When I say Africa, we are targeting Africa with a specific type of products. When I say Europe, it's a different package, but the main ingredient comes from India. So it is continuous, but it's like preparing a pizza, if you know it. The pizza needs a dough and topping. So we can prepare the dough over here and change the topping in a country like Egypt, targeting Europe with different type from what we do in Africa with different pricing system. And then later on, we can move to North Africa and even West Africa, and then cross the ocean to a port in Brazil like Santos. So what we need to do is to have a holistic vision, not just to be in a hurry of exporting a final product. What we need to do is something for our people. So the people need something different than just having numbers and figures. They need to feel and to enjoy the fruits. Those people are in India, are in Egypt, are in the Gulf, are in Latin America, the people everywhere. They need this. So what we need to do is a sort of inclusion.
Right, understanding each other, that's a very critical piece that you have mentioned. And cultural understanding, cultural integration, when it comes specifically to Arab countries and India, that has been a very critical part. And I would say that I have seen instances of events from Arab world in India where the cultural sensitivities of India was upheld, where in one fair it was kept all vegetarian just to align with the cultural sensitivities of India. So a lot of effort has been put into this, and that is a very critical piece because we are really dealing with human beings who have certain cultural inclinations. Now, Anant, when we talk about going to a far land and setting up a business, and several FTAs have been signed by the government recently to open newer markets for us. You did mention in a passing manner on the understanding and know-how of a different land. How much of that capability is there, and what can the government really do to lift up countries and companies and sectors who have not taken that stride in converting it into global fare? How can that be achieved? Because I met electronic manufacturers who see the US opportunity now that we are made competitive, but they do not have the wherewithal to take that stride.
I can give you an example of our own company, which is Seat Tires. About 10 years ago, we made tires primarily for the domestic market. We exported about 15% of our tires, but it used to be a spray and pray kind of methodology. So whatever we made for India, we would say, okay, we have excess capacities, let's sell to Africa, let's sell to Middle East, and whatever got sold, got sold. I'd say over time, we went out market by market, understood the customer's needs. So I don't think the government can do or needs to do a major role. It is all up to us entrepreneurs.
Those were old times. Now a lot of markets are really understood and the flow of information is much better, and there is technology and that support also available. Have things changed?
No, absolutely. So I'd say that was the earlier methodology or earlier challenge. We need to now move out, go to Europe where we've signed an FTA, or Oman or wherever else, understand those customers' needs. Again, to go back to the tire example, we found in Middle East temperatures are 50 degrees, people drive on straight roads. Europe, people drive much more on curvy roads. So the nature of the product is very different. There you need to have an entire range of tires in Europe, winter tires, all-season tires, and so on and so forth. So we developed a tire range for that particular market. We went on to German magazines where we found customers look at automotive magazines before they make a decision to buy a product. We set up distribution. We moved our R&D center to Frankfurt, and so on and so forth. So all of that was not needed by the government in a way, and I think that's how we have to continue to work as corporates, go out to these countries and solve the problems for ourselves.
Right. So these corridors, I thought, could be of some impact in at least helping with the templated version of what can be achieved. But Nilesh, fund flow is also very critical, and especially for our market where the mood swings are dependent on the FII inflows. For better understanding of our market and for opening it up to much deeper pockets and also not being dependent on any one country's fund inflows, how critical is that, and how is this realignment globally impacting the fund flow into the markets?
So there are two ways of managing or deepening the markets. One, let's say in the Indian context, domestic. Our savings allocation historically has remained towards physical assets, real estate, gold, silver. And a smaller allocation was towards financial assets, bank deposits, mutual funds, insurance. First, SEBI came into play. Wild West became a regulated market. Investor confidence increased. And now we are seeing financialization of savings happening. Whenever there will be regulated market, capital will flow. It's applicable domestically, it's applicable globally also. So India must ensure that its governance, its regulations, its policies are at par with the best in the world, and certainly better than the peers. Automatically capital will flow. Second, capital will flow towards growth. Capital is like water, it will find its own level. We need to ensure that our economic growth and India in growth remains ahead of the peer group. If not on a yearly basis, but at least on a longer term basis, people should give us higher value for sustainable growth. Growth and governance both will attract domestic capital as well as global capital. And finally, you need to be tactical in your allocation. For example, today lot of capital flows are index-based. Passive funds have taken off in size. Now you could have the best growth and best governance, but if you are not part of index, you will miss out on a great opportunity. We must engage with this index providers to ensure that we are represented appropriately. Some tweaking and suddenly your weight increases, certain missteps and suddenly your weight decreases. So we need to think strategically as well as tactically. But one final message, the history suggests that India was Sone ki chidiya. The present shows that India is actually Kasturi Mrug. What do I mean by that? Kasturi Mrug is a deer up in the mountains which keeps on roaming around in search of the smell without realizing that it is coming from her own body. We are like that. At today's market prices, 150% of India's GDP is locked in precious metal, gold and silver. Our gross foreign direct investment flow is about 2% of GDP, $80 billion on a $4 trillion economy. But 150% of our GDP is blocked in the safe lockers. How do we monetize that saving? How do we unlock that frozen capital so that it can flow into domestic market? Moment global capital sees that domestic capital is powering into a market, they will also get the confidence. So we need to move India from Sone ki chidiya to Kasturi Mrug so that it can become Sone ki chidiya again.
All right, great use of words there. And it's a mirage that we are really chasing while knowing fully well that all our goodwill and our resources are right here with us. But one point that you mentioned is that, which we see in the equity markets and the same funda that is applied here, that if you are the promoter and you put in equity, the rest of the fund flows will flow in because you are backing, you have that gumption in your company, and therefore others will also have. So this is a point well taken, Nilesh, and very well presented as well. Adil, when I talk about India and the way we have projected ourselves in the recent spate of many challenges, and may it be oil politics, may it be several trade discussions, how have you seen as a critical analyst and an expert the kind of narrative that has been built by India and projected as a strong nation, looking out for the interest of the country, but still being collaborative and open to business to the world?
So India's position and narrative has matured dramatically over the last 20 years. You know, when people used to say that when you are the 15th largest economy, it doesn't matter how well you speak. Not many people pay a lot of attention to you. Okay? And really it was you perform, and that gives you the right to have the right narrative. And I think the fact that the Indian economy has performed over the last 30, 40 years and the last 10 years has allowed it to do some things right in terms of the narrative. But if we had not done it, and if we had continued to grow at 3% a year, we would not be in a position that we can play an important role. As the third or fourth largest economy, we can now be more mature about what role we want to play. And in that sense, this is a great opportunity I see. If there is, you know, if you're in a world where one person dominates and you're number 3 or 4, you don't really have much of a play. But if you're in a world where there are many people, where it is a multipolar world, all of a sudden you have a standing if you play it right. Okay? And I think over the last year or so, the idea that India is a part of the multipolar economy, that we are going to become even bigger and have great opportunities, and that we want to deal with everyone fairly, has been a great strength. And I think that has played out really well. I think most of you heard this morning our Foreign Affairs Minister, External Affairs Minister Jaishankar, who, you know, in terms of communications is a 10 on 10. In any place that he goes, He is just amazing at how he communicates. But I think you can do that, and that has a lot more impact if the underlying strength is there. And the underlying strength is the growth of the economy over the 20 or 30-year period. So now that we have that, how we play that is a very important piece, but you can only do it if we were able to do it. So what that says is that over the next 10 to 15 years, the number one thing that we have to do is to ensure the economy keeps growing. Because then our strength and our ability to do everything, our ability to be part of the global south and help everyone is better if we have grown.
That's right. Our economic growth actually gives us the power of weight of our word. And India has very meticulously matured and upped the ante on the global sphere that we have seen, which the countrymen are very proud of. Professor Khaled, as we end this discussion, your final words. Multipolarity has challenges to stability as well. What is in front of us is no choice. We have to be collaborative. In your view as a leader, what are the final words that you want to leave us all with on how to repurpose that multipolarity in our own benefit at this time where there is so much disruption, and to avert destruction and use that disruption for growth?
We need more openness, more collaboration, more allies. We need to have strategic alliances, a lot of them, to be open to understand that there is no room for one product, for one market, for one ally. We have to open for a lot of allies. So cooperation is very important, changing the model, understanding what exists.
Thank you so much. Thank you all of you for sharing such insights. And I'm sure the audience also drew a lot out of this discussion. Thank you so much.
Thank you. Thank you very much, Nisha, and thank you to all of our speakers. If I could request you all to please step forward, we'll have a photo op as well. We'll capture all of you together in the form of a photo op right ahead. If I could urge all our leaders to come together. But on that collaborative note, ladies and gentlemen, as we come to the end of this riveting discussion, I just have one final announcement, but first up, we'll have you all right ahead, just in front of the, we're used to round table discussions as a square table, literally, but it did turn out to be absolutely invigorating for us, setting the tone for all that's in store for us across these 3 days.